Street Drive on 99.3 Nigeria Info.
Hello, Lagos. Good afternoon. It's another time for Broad Street Drive to take you around the world of business. I am Hilary Nnoruka. Every domestic and international financial institution projects that Nigeria's economy will grow by more than 4% this year. And I mean, if this happens to continue a trend that we witnessed last year, where many economists and financial analysts say that Nigeria's economy became stable. Now, services are expected to lead the charge. Last week, I had a financial analyst and stockbroker, David Adonri, join us and tell us what to expect this year. He talked about the big name listings expected on the Nigerian exchange, and we also delved a little bit into the wider economy. But before he left last year, I promised, last week, I promised I was going to bring him back because we had more things to discuss, which we're going to discuss today. So today we are continuing our discussion on the 2026 economic outlook for Nigeria. I know I wanted him to talk about something which he says is important to him and also important to me and should be important to every Nigerian. And that is the oil benchmark for Nigeria, the oil benchmark in the 2026 budget proposal, which stands at I think it's 64.85 naira. That's 64, not naira, dollars. I'm sorry, $64.85. But many economists are projecting that this year oil prices might average around $55 a barrel. And of course, if this happens, it means there's going to be a $10 difference from what we've planned our budget with and what the market is going to bring our way. Now, this is going to bring, of course, challenges our way. Another issue is also how much oil we are expecting to produce this year. Now, the budget target is 1.84 million barrels per day, an average of 1.84 million barrels per day production. But projections from financial institutions cover around 1.5 million barrels, which means that we would be unable to meet our production targets, as Nigeria, as a country. And I'm bringing back Mr. David Adonri. He's joining me here. He's a stockbroker, he's a financial analyst, and he's the vice chairman of Highcap Securities. Mr. Adonri, glad to have you again today. Welcome to Broad Street Drive today. Hello, Mr. Adonri. I'm not sure if you can hear me. Looks like he can't hear me. He's joining me via Zoom from the Nigerian exchange. But hello, Mr. Adonri, can you hear me? Oh yeah, looks like your network is poor. Okay, so what's going to happen is that I'm going to call you on the phone. So we'll have a phone conversation because the internet from your end seems to be poor. The Zoom isn't working properly. I don't think Lagos can hear you properly. So I'm going to call you on the phone shortly. So we'll kick off this conversation. Okay, Lagos, you're back. This is still the Broad Street Drive on Nigeria Info 99.3 FM, and I'm Hilary Nnoruka. This is part two of our economic outlook for Nigeria. And joining me from the Nigerian Stock Exchange is Mr. David Adonri. He's a stockbroker, financial analyst, and the vice chairman of Highcap Securities. So, Mr. Adonri, welcome to Broad Street Drive today.
Yeah, thank you very much, Hilary. Good afternoon to you and to all the viewers.
So afternoon. Now I think, yes, I can hear you properly now and Lagos can hear you properly. So we started a discussion last Monday about the Nigerian economy in 2026. We kicked off with the stock exchange and what to expect. And you talked about the big name listings that we are expecting on the exchange this year. We talked about the Dangote refinery and the Dangote petrochemical plants, Dangote fertilizer, and we also touched about on Flutterwave. And then we expanded the discussion to take a look at the broader economy, and something that looks like a thorn in what you've been discussing is the oil target. And sorry, Mr. Adonri, I think your colleagues and on the exchange, there's still some noise around you. Is there a way to...
Okay, so what will happen, I have relocated from the floor now. I've moved to the lobby.
All right.
To avoid that noise there.
The noise of trading. Okay.
Yes.
So, in the budget, right, in the 2026 budget proposal, Nigeria's budget, the oil benchmark is $64.85. But many economists are projecting that the oil price might average $55 a barrel this year, which will mean that we would be unable to fund the budgets if we go by the benchmark. Another issue is also the projected production of oil this year. According to the budget, it's around 1.84 million barrels per day, but we've not hit that. We've not hit that lately, and analysts are projecting that we would only be able to meet 1.5 or average 1.5 million barrels per day. Don't you think this is troubling? How does this tie into the economic outlook for Nigeria? Because I know last week we were talking about you are optimistic, just like so many other people I've been talking to. They're optimistic this year. But how optimistic should we be when we take a look at oil production and the price of oil?
Yeah, thank you very much. Concerning the daily production of crude oil, perhaps we can get a little bit close to the target as set in the budget. But however, the crude oil price is what is so difficult to ascertain as at this point in time, because there are so many geopolitical shocks emanating from various parts of the world that are capable of changing the dynamics concerning the price of crude oil. You know, the drums of war are still being beaten in the Middle East, and should the U.S. intervene in the ongoing revolution in Iran. So that can actually also change the price of crude oil globally. So just remember that not long ago, the U.S. intervened in Venezuela, which has the largest reserve of crude oil in the world, a result of which a lot of the discounted crude oil that hitherto was flowing to China and other rogue nations, they have been cut off. So the other avenue through which crude oil flows to a lot of those rogue nations at heavily discounted prices is Iran. So if firm order is restored in Iran, the possibility is there that the crude oil market can firm up. So we can actually be seeing a market hovering around between $60 and $70 per barrel. But however, I think the Nigerian budget has been predicated on about $55 per barrel. Now, where my optimism comes from is that there is a gradual consciousness to moving the economy away from that, financed mainly by crude oil proceeds, especially the revenue of the federal government. There's a conscious effort by the federal government, as indicated in the new tax law, to now rely more on taxation to drive the increase in revenue, in public revenue. So that in itself is a mitigating measure that the federal government is trying to put in place in case what crude oil provides suffers a shortfall. So tax should be able to augment. However, there's so many other areas. If you look at even the participation of government in the GDP of the country, the contribution of government is probably not more than about 10-15% to GDP. So essentially, when we are talking about crude oil revenue, is mainly as it concerns the government and not the economy. So if the other sectors of the economy can come up strong, they can then facilitate the growth and stability of the GDP of the economy. So I'm looking at first the agricultural sector. Nigeria is an agrarian economy, and if further is re-established in the rural economy, both mining and agriculture will increase their contribution to national economy. And of course, many other areas are coming up strong. You can see even the domestic petroleum industry. So many domestic production is going on both by the major refiners and also the modular refineries. So those are increasing their contribution to GDP from this. And so the real economy, is where we are targeting as the engine of growth of the economy, which will, at the end of the day, surpass the contribution of the public sector to the economy. So that essentially is what is driving my optimism, Hillary.
But I know we usually have this discussion about oil revenue and non-oil revenue, but there are so many people, including myself, who would argue that even the real sector and the non-oil sectors of the economy depend largely on the oil sector. And this is because oil makes up most of our foreign exchange earnings, and because we are an import-dependent country, we require these monies, the earnings from oil, to be able to import other things that the real economy needs. So my question is, to how much is the Nigerian economy dependent on oil?
That dependence is actually gradually declining, because if you look at the trade figures for last year, the growth of the non-oil sector severely surpassed that of the crude oil export sector. And remember that the pressure on the foreign exchange market has diminished considerably since Dangote refinery started refining. Over 80% of the demand for forex in the foreign exchange market hitherto has actually come from the importation of petroleum products. But that scenario has been changed now with the emergence of Dangote mega refinery that is now able to substantially meet a lot of domestic requirements of petroleum products. So that has therefore reduced the pressure on the foreign exchange market. The non-oil sector is also galloping at a rate that you can say that the intensity is very, very high. That intensity will become even much higher if the factors that are suppressing the growth of that sector they are addressed and put under control. The main factor that is stifling the non-oil sector is this insecurity. With the current onslaught on insecurity and the support that the Nigerian government is getting from foreign partners, it's just a matter of time for the banditry and terrorism to be put under control in the country. So that would therefore release the potentials of the rural economy. And when the rural economy is strong, any nation's economy will be strong, including Nigeria. So that essentially is what will happen. So the dependence on petrodollar is much more as it relates to public revenue. At the time, there was a time in this country when I think during the COVID period or around that period when the crude oil market collapsed, and around that time, the diaspora remittance almost doubled what Nigeria earned from crude oil export. And it's still not unlikely that the diaspora remittance is almost at par with what Nigeria is realizing from crude oil export. So essentially, the economy has been gradually moving away from crude oil dependence.
Crude oil. But let me ask you this. Let me ask you this.
Yes.
So, do you see a stable foreign exchange regime this year? I know last year it was largely stable. So, do you see it stable this year, or do you see the naira rising against the dollar?
The forecast is that if you even look at the budget and what other analysts are saying, the forecast is that the naira will appreciate this year. It is expected to continue to appreciate steadily from around 1,500 naira to about 1,400 naira as indicated in the 2026 budget. It can actually go better than that. The exchange rate can actually go better than that because the scale of operation of Dangote refinery is increasing. And so the need for the importation of petroleum products has continued to diminish, and that also translates to lesser pressure on the foreign exchange market and on the currency. So when that is added to the growth in the non-oil export sector, and of course the resurgence in the agricultural economy, so more wealth creation domestically will occur. So the external sector will start contributing less to the income, the national income of the country. So those are the reasons why we think that the crude oil market may be unstable, but that instability is not sufficient to derailing the major assumptions of the 2025 or 2026 budget.
So in a nutshell, the Nigerian economy is less reliant on crude oil earnings right now than it was, say, 5, 6, 7, 8 years ago. And
yes, indeed, you are correct.
And I know that Aliko Dangote, when his company disclosed its its Vision 2030 goals, was mentioning that they will ramp up exports both of petroleum products and fertilizer, and that when that happens, and when he was talking about paying dividends in dollars. how is there a provision for that in the NGX? For its companies to be listed on the NGX and for dividends, for Nigerians to earn dividends in dollars?
Yes, of course, a Seplat that is listed on NGX pays dividends in Naira dollars. And it's not unlikely that GT Bank or GT Co, which is has a dual listing on NGX and London Stock Exchange, would also pay dividends in hard currencies to the foreign investors in the company. So it's really not going to be a new development. It's something that has been happening. And if Dangote is also going to do that, of course, that will boost the confidence of foreign investors in the Dangote group, especially the refinery, fertilizer, and even the petrochemicals. Note that if a company that earns in hard currency has the capacity to also distribute dividends in hard currency to his investors all over the world. And Dangote refinery has started export petroleum products to other countries. And sooner or later, the refinery, when it scales up from the currency is around 50,000 barrels per day to about 1.4 million barrels per day, it will be able to cover the whole of West Africa, East Africa, so we are deepening its exports to Europe and America. So it's actually a company that will be minting dollars.
Interesting, minting dollars. I like the sound of that.
Yes.
But before I let you go, I want you to list the sectors of the economy where you expect the most growth this year. If I'm investing and you are to advise me, where should I be putting my money in Nigeria this year? In 2 minutes. And then why?
No, the kind of prosperity that is coming into the economy now is expected to sweep across so many sectors in the economy. But those sectors that were previously depressed, that are now being released from such depressions, like the agricultural sector, I think it has a very bright prospect. Of course, the petroleum industry continues to offer good prospects to investors. Now that the insurance industry is scaling up and getting stronger through policies and also through recapitalization, of course, then the banks have a very huge war chest now to play with. They have a lot of money, in addition to the FX, the foreign exchange windfall that they enjoyed previously. They have now also added additional capital, so they have a lot of money with which to run their businesses. So the banks are also fertile grounds where investors can harvest abundantly. So which one again? Okay, look at the telecoms. Their tariffs. The regulators of that sector increased their tariffs.
Sometime last year,
so that in itself is a way to drive up revenue and profitability in that sector. So the telecom sector is also expected to offer good returns to investors in the market.
So, in your opinion, telecoms, agriculture, oil, and banking and financial services?
Yes. So the only other area that
you're running out of time. So
offer very big returns.
Yes.
Okay, that may not offer big returns will be the fixed income sector, because interest rate is expected to decline severely in the country as inflation drives to single digits. So those who are in fixed income, we should start thinking of maybe diversifying some of their assets into other areas.
Thank you so much, Mr. David Adonri, Vice Chairman of Highcap Securities, for joining me for the second part of the Nigerian Economic Outlook for 2026. We did part 1 last Monday and part 2 today. And that's it on Broad Street Drive today. Up next is the news with Yvonne Ohaifu.
Nigeria Info. We are more than just radio. Subscribe to our YouTube channel at Nigeria Info FM. Check us out on Facebook at Nigeria Info 99.3. Follow us on Twitter at Nigeria Info FM and on Instagram at Nigeria Info FM Lagos for live updates as it happens. 99.3 Nigeria Info. Let's talk.